somebody needs to reach out to the bank. That's pleading ignorance.
I just can't understand why it's not a big part of education, because financial literacy levels in Australia is very poor. Young people not taught it in schools. They don't understand it. They'll learn from some sort of mistakes. Parents don't understand credit files themselves.
I feel for the families out there who are under a crunch, but we're just trying to give the education around what can you do to help improve, maybe not your future, but break that generational chain.
Yeah.
Wealth is not all about money. Money doesn't buy you happiness. Money allows you to go have that coffee or lunch with the people who bring you happiness. Hello and welcome to another episode of From Why to Wealth. We're an education-based platform helping everyday mums, dads and business owners achieve their financial objectives. We just so happen to do loans. Look, before I introduce my guest, I want to share a thought for the day. Wealth is not all about money. Money doesn't buy you happiness. Money allows you to go have that coffee or lunch with the people who bring you happiness. On that note, I would like to welcome Andrew Willis, Senior Finance Broker, and our guest, Daniel Walker from Bon Voyage Credit Repair.
Thanks, mate. Thanks for having me. Good to be here.
Andrew?
Okay, mate.
We good today?
Yeah.
As usual. So what are we discussing today? I think a hot topic, comprehensive credit report, also known as a CCR. People don't quite understand how that impacts your borrowing capacity. I believe that's a passion of Andrew's as well, and it's continually something we continually discuss. It's a detail. So what a CCR is, it's a detailed snapshot of an individual's credit history and financial reliability. Unlike a basic credit report, which may only list defaults and major credit issues, a comprehensive credit report includes positive credit behaviors and a fuller view of borrowing capacity. So if we were just to quickly touch base, Andrew, in the last probably 18 to 24 months, some banks are coming out, not only the open banking, but they're looking at the comprehensive credit report to determine their decisions when approving a loan. You're saying the same thing, right?
Yeah, 100%. And, it's, I guess, more beneficial for brokers because, years gone by, you'd have to provide 6-month statements to show payment history for, say, a personal loan was there. Now they just go off the credit report. So it speeds up the process. It's less paperwork for the client. It just really works well, providing that evidence that it's been paid to the bank.
So on that note, Daniel, so the key components and why Daniel, we've called him in is this is what he does. He helps people repair their credit.
Yeah. So pretty much what I do is just try and help people fix up their credit reports, because everybody makes some sort of mistake in their life. And touching on that education is most people don't really understand how things work when it comes to credit files. And so it's very, very easy to make mistakes. And it's just a massive issue. So I guess overall, it's a really big opportunity, to try and help educate people, because the education is not widely available, and most people learn the hard way by making some sort of mistake and copy it on their interest rate or something like that.
Well, I've had a few phone calls that I've had this week, and individuals are saying, I made a few boo-boos in the last 5 to 6 years. Where are we at? What do we do? And I think that's what connected us was, even prior to that, was, look, when it comes to a comprehensive credit report, the education piece, it's not there. So you hear clear score, clear view. People don't look at it and they take it with a grain of salt. So the key components around a comprehensive credit report are credit accounts. So that lists all the open and closed accounts. It includes credit cards, mortgages, lines of credit. For each account, it shows a credit limit, current balance and repayment history. We've changed our language in the last probably 12 months, Andrew, whereby we don't only add, please provide us with pay slips and bank statements and your credit card, HEX debt. Can you please provide us with any buy now, pay later? And people say, what's their famous saying when you tell them you've got an afterpay account? Or there's no limit to it?
Yeah. See it almost daily.
The other thing is repayment history. The beauty about the CCR, it details the repayment history, and it takes about 24 hours for history to show. However, again, we've seen it. When a client closes an account, sells and buys a property, pays out a credit card, it doesn't take 24 hours to show us closed, correct?
No, rarely does. Unless you've got a really motivated creditor wanting to help, because it's humans, right? At the end of the day, they have to update something to paid or closed or whatever. And if the creditor doesn't have the right systems in place or the right people, things slip through the cracks. Had one recently, guy paid it. He had to get a payout figure. It was about 17K or something. And it took the creditor 2 months to get it updated. And that was in the end, we had to go to the credit reporting body and provide evidence it was paid.
Just on that note, I usually tell clients, and when I'm educating people, it takes about 3 months to show on your CCR. Would you not say the same?
Yeah, for sure. Like, they refinance, or the refinance will pop up straight away to show the newer loan accounts there, but the old one takes time. Like you said, 3 months. If they close a credit card, they need an actual letter from the bank they've closed it with, because it's not going to show on the credit score that it's closed for, like I said, 3 months. So we always need that letter. Hesitant to give a letter, they might only send an email, and then the bank might not accept the email. So
absolutely correct.
Messy.
Yeah,
it does, especially when you're dealing with the bureaucracy. I mean, we deal with banks on a regular basis, not all the same, but when you clearly identify a closure, but they won't provide the letter because the branch can't do it, you have to go through so much red tape. And look, I understand the reasons behind that. However, there's got to be just an easy way of doing it. I mean, they're very quick, month in, month out, if you're in financial assistance or in hardship, to note it on your credit report. But when it comes to paying out, it does take 3 months. I'm hoping that changes.
Yeah, and look, from what I see of mine, it does come down often to the creditor. Some are quite fast, like they've got the system in place to be able to do it quickly. But
who are you seeing that are fast? Are you saying banks, non-banks? How are you seeing it?
Probably, I couldn't put them in, I guess, like a basket of like their type of lending, but usually like the larger ones are a bit faster to report it. It's more so those smaller lenders that we tend to see takes like a little bit longer to do it. And I could, I'd only just be assuming things as to why that is, but we do see some that report quite quickly. But there are also things that people can do in those situations where after they've settled it, to try and expedite the process a little bit on their own, which they shouldn't have to, but there are things that people can do to try and push things along as well.
But in your instance, and this takes me to the third point where you would be heavily involved, are the defaults and negative listings. So the comprehensive credit report, and we'll recap these key components, but it shows any defaults, bankruptcies or court judgments against the individual. These listings can affect credit scores negatively and often stay on the report for several years. I guess this is where you come in, and to understand, look, having had 20 plus years experience, when you had a default listed on your name, you would say to the bank as an excuse, oh, I changed address, but now the language has changed from the banks going, well, it's on your onus to tell us that you've changed address, because the bank never wants to come out, or a lender never wants to come out to default you. They give you three options. They give you some sort of written correspondence, a phone call, and back in the days, a knock on the door.
Yeah. Yeah.
But that's where you come into line with the defaults and the negative listings.
Yeah, it's probably the most common thing we deal with, particularly credit defaults. And yeah, more often than not, it's just something simple like they've moved address and they haven't cut off the electricity bill, haven't told them of a new address. And so the bare minimum of what they're required to do is send a letter or an email just saying there's a balance outstanding and provide those notices. And then if it still remains unpaid, they'll usually list a default after that. And more often than not, people just don't update their addresses. So that's probably the most common thing we kind of come across. And you probably see it from your end where it's really disproportionate, right? You might have someone that has a $250 electricity bill they haven't paid, and down the track they're trying to refinance or buy a first home. This silly little thing, a couple $100, is potentially going to cost them thousands and thousands of dollars. And it's just doesn't make any sense.
Just on that note, if it's a non-financial default, it's a telco default, banks tend to let it slide.
Yeah.
Because people make mistakes.
As long as it's paid.
Well,
they'll say, can you just pay that? And then we still ignore that. So
when somebody builds, let's just say moves. The first thing what's the first thing you do when you move into a property?
I'd buy a TV. I don't know.
on day of settlement. What do we?
You're setting up, you're getting everything ready.
You're calling electricity company, you're calling the water, well, that's automatically transferred over. You're calling the internet, right? The same thing you're doing to enter a property, you would do on the exit. Hey, I'm moving. Can we transfer the account over? You would think that would.
You would think, but life gets in the way, and the excitement and whatnot. You're not thinking about those kinds of obligations. You're probably more keen to get the internet set up so you can get on to, computer or whatever.
Well, that's my point. If you're setting up the internet, you're going to go, I have an account there. Can we transfer the account over? I get all that. The other one is, and we're going to make a segue back into this defaults and negative listings. The second one is credit inquiries. So the CCR will list recent applications for credit, including the type of credit and the date of the inquiry. Too many inquiries in a short time may negatively impact credit scores. We did have this conversation yesterday, and I'll finish off with credit score. Often includes a credit score, which is numerical representation of a credit worthiness based on the details in the report. In Australia, credit scores can range from 0 to 1200, depending on the reporting agency. Now, in our conversation, I asked you offline, it's all algorithms you mentioned. There's no real number where if I make an inquiry for a credit card, it's costing me 100 points or 20 points.
Yeah, there's no real value associated in my experience from seeing reports before and after with inquiries added on. It's really the whole picture. So we've touched on the negative things like the repayment history or defaults, but there's so many other factors. There's also suburb where someone lives is factored into the score, their age, all these kinds of things. So I could compare someone that might be 19 and they're just trying to get a credit card. They might get 2 or 3 inquiries. Likelihood is that score is going to be low because they're quite young. They're trying to get credit quite quickly versus say someone that's 50, they don't have any inquiries or anything. That same person could go and get 3 inquiries and not really see much impact to their score. So it really depends on the whole thing as to what is going to impact it. But generally speaking, the more stuff you're going to add on, whether it be inquiries or whatever it may be, will start to decrease the score, definitely.
Not only credit scoring, internal credit scoring for banks. So I'm not too sure if it was yourself had this scenario. I know I've had one where the client was declined. Do you want to touch on that? And you sort of...
So I was doing what was the loan? It was a guarantor loan. So submitted the loan with lender A. Straight away, it comes back like within a minute, auto declined. So someone still goes and picks it up, but for whatever reason, it's been auto declined. It could have been late repayments on a previous mortgage, anything really, like a credit card or a transaction account went into minus too many times. So straight away being declined, but then, we didn't get through on lender A, but then went to lender B and accepted straight away. So
wasn't one of them with
it
was a claim? It was, but there was no.
They had never applied for finance before. This was their first home. They had never applied for credit cards, anything like that, and declined, auto declined through their system.
Right. Did they give a reason, like a clear reason why?
No, they never let us know.
So they don't need to tell you. They just decline. Thanks for coming. It's until we probe a little bit more that, your relationship manager will say it could be for the following reasons.
Yeah.
But I know a couple of banks out there do internal credit scoring. But as Andrew said, I mean, if you had made some few mistakes 15, 20 years ago when you negotiate to pay out 50% on a dollar or 50 cents in a dollar for a credit card, that's then a write-off for the bank, which goes to your history forever. You can never apply to that bank again. But I guess the key takeaway from what Andrew just said is don't be deterred for you guys out there. If you have been declined, just give us a call because...
There's always plan B, C, D. There'll be someone out there that will take you on.
Absolutely. So
I'll just touch on that as well, if that's all right.
Please.
Because that's the power of finance brokers as well, is that they've got, as you know, all these lenders that you can go to, whereas someone going direct to a bank might not fit inside that bank's policy for some whatever reason, but they might fit in all these other banks' policy. But if they don't use a finance broker, then they might go to this one bank, get rejected, maybe go to another bank that doesn't fit in that policy, rejected again. Whereas going to a finance broker, a good finance broker is going to check all this and place you with a lender that makes sense, right? And 99% chance going to be approved.
But open banking is going to be the new norm. It's the inevitable. It will come. Don't quote me, there's under 10 banks, probably even more, who have the buy-in. Have you heard about the open banking side of things? All it is you click a button and it extracts all your bank accounts from every other bank, and I'll give this particular lender a snapshot. But then you still have to collect, from a compliance perspective, we still have to collect bank statements. I guess what we're trying to get at is, gone were the days of having an account with lender B. Well, not gone are the days eventually where lender B is not on open banking and you can have a bank account with them. That doesn't work anymore. I mean, open banking's coming and it'll eventually slowly creep in and be here to stay. But just on a recap on the key components, you got credit accounts, your repayment history, defaults and negative listings, credit inquiries and credit score. They sort of make up the key components. But what I wanted to touch on and just go back to, in your area of expertise, you're there to help clients to look at removing defaults, which can give a positive impact to their comprehensive credit score. What are you seeing, particularly in the last 24 to 36 months? What are you seeing more of when it comes to helping your clientele base?
Yeah, sure. So, we help people with defaults. Like I said, it's probably the most common one, but we also help people with the inquiries, the repayment history as well. And probably over the last, say, 18 months or so, the credit inquiries and the repayment history have probably been the biggest issue for people. Defaults are those ones where it's like somewhat obvious for people to avoid, whereas credit inquiries, it can be very easy, right? People fall into traps online, no credit check, fast money, this kind of stuff. But there is a credit check involved at a certain point. And people can rack them up quite quickly, especially if they're not using a finance broker. And going back to what we were saying before about how if a bank rejects someone, they're not really going to disclose a clear reason why. They'll probably just say something along the lines of, look, you don't fit right now, try again in 6 months or whatever, right? And then that same person has no idea why they were rejected. Okay, no problems, we'll try again in the future, a few months down the track because they need the money again. Bang, rejected again. And it's a cycle. It'll keep happening because they don't get a clear understanding or education, like what is the problem. So if creditors and banks can play a huge role in that, where they can stop it at that first point, right? They can say, look, you rejected or declined for this reason, fix that or address it, and then come back and you might be in a better position to lend from us.
I didn't know you would be able to remove credit inquiries. Is that, how do you... is there a lot of work entailed in that, or is it just...
They can be challenging because really what we're checking is to see if they've the client or the consumer has had the correct, consent, like given the consent for the credit to do it. So if there was consent and assigned privacy or done by a finance broker, something like that, can be quite challenging. But there's also exceptional circumstances. So people will apply out of desperation, really dire situations, might be some domestic violence involved, financial abuse, things like that. Fraud, that's a big issue these days, very easy to be scammed. So there are circumstances that we can arrange for them to, not always, but if there's exceptional circumstances, sometimes even if it is correct, creditors might be open to considering removing it based on the exceptional circumstances. So it can be possible. I
mean, we in the brokering space as well have an obligation if a client feels they're under financial duress. The key there is to report it. You can't turn a blind eye. That's unacceptable. But it's very interesting that the default is a given, but you wouldn't think the inquiries. I mean, I was doing a training session 2 weeks ago, and I went around the room and I said, who's got more than 2 credit cards? And 3 out of the 10 put their hand up, and I've gone, let me guess you only use one of them. And they've gone, yeah, but I always pay it at the end of the month. I go, great. And let me guess, you took them less than 6 months ago to get your freaking fly points. And he goes, head down, one out of the 3 goes, yeah. And I've gone, well, that's affecting your credit score. Yeah. Because the inquiries you make, let's just use just a silly number, right? 50 points are lost on your credit score for every credit card inquiry you make. Now, given that it gets made up over the course of 3, 6, 9, 12 months, nobody knows the algorithms, it could be a detriment long-term, especially particularly if you've got 100,000 worth of credit cards. The bank doesn't care. They'll go off the limit, not the balance owed. So if you owe $10, they're going to base it off the 100,000 or 50,000, whatever it is.
Yeah, definitely. And the thing within repayment history as well is it's so easy for people to miss payments. And so, say you've got a payment due today on your credit card and you miss it for whatever reason, typically you'll have a couple of weeks to make that up.
Yeah, they'll give you a grace period.
Yeah, your grace period, right? But banks don't really have any obligations to tell you that you're in arrears.
It's on your mobile app. It clearly comes up, missed payment.
Yeah, like there's things like that in place, but in terms of obligations, they don't have a lot. And people have stuff going on, right? So it's like, even if they're seeing an app, they might be dealing with loss of hours at work or a sick family member or whatever, right? It's not a priority. And they don't fully understand what the consequences are of that. So 2 weeks later, you haven't made it up. You haven't seen the notifications or you haven't received them, haven't got a call from the bank. And then all of a sudden, late payment. And then happens again the next month, and so on and so on. It's this cycle, and it's a big piece of it is the education, right? People just don't know.
You need to pause, right, Andrew? You need to pause, and you need to go, hang on a second. I got a sick family member. I'm not well. Somebody needs to reach out to the bank. The bank will help. Like they give you financial assistance, but we get that. That goes onto your credit report. We understand that, but you can't just ignore it. You're right. Does it make sense? Like you just can't ignore it. Like that's pleading ignorance.
Yeah. Look, to an extent, I definitely agree with it. The communication is key, right? If you're in that position, it's always better to communicate because the bank can usually come up with some sort of alternative solution and whatnot. And look, that's an ideal situation where someone does speak to them, but the stories that we see and hear from people that are in dire situations, sometimes it's the last thing that they really care about. And maybe it is a part of the education piece for them. They don't really know how it's going to impact them, or they might not care how it's going to impact them in, say, 3-6 months' time because they're living in the moment. Yeah, and they might not envision themselves being able to buy a house or a new car or whatever because of their situation. But when things change for the bad and the good, right? So even those people things that they can't see the light for, for talking about financial stuff, light at the end of the tunnel, then they might not care so much.
But if there's 1 or 2 missed payments in a 12-month period, the broker will explain to the bank assessor, look, this is what happened at that time. Whether it be a misunderstanding, a family member was sick, so they missed a couple of repayments, but they've made that up since, and they haven't missed since the family member's better. You're not going to get declined on 1 or 2 missed repayments. They're just going to want an explanation as to why. If it's over a 24-month period, you got 1, 2, 3s, 4s across a 24-month period, that's when they're going to say, no, not for us. But if it's just 1 or 2, maybe 3, we can put an explanation in, explain to the assessor, look, this is why, and then they move on. They get that things happen in life.
But again, it's financial literacy, and that's the reason why we've established a podcast like this. Financial literacy is 101. I mean, you go to schools now and you talk about a CCA, I don't know, why is that important to me? All they do for you at school, tax file number.
Yeah, that's about it. They'll do,
get your tax file number, right?
Yeah.
I'm the massive advocate. Why aren't people like industry advocates being asked to come into school? You got to go through all the word of the day, bureaucracy, why we can't for whatever main reason. But when there's a need for financial assistance, the mayor or the senator or the councillor or the person in a high position is there. But financial literacy.
Yeah. I just can't understand why it's not a big part of education, because the financial literacy levels in Australia is very poor. And
do you think it's poor due to ignorance, or do you think it's poor because the agenda's not being pushed?
I don't think the agenda's being pushed. I mean, it's a generational thing, and I'll just use like credit reports as an example, right? Young people not taught it in schools, and they don't understand it. They'll learn from some sort of mistakes, but where parents should be able to fill those gaps in and teach them about that kind of thing. For example, like a tire, you could probably teach a kid how to change a tire. Parents don't understand credit files themselves.
Yeah, fair
So
call.
they don't know, and often they'll give advice that just doesn't make sense. They'll give advice like, go get a credit card to help your credit file, which is terrible advice. And so it's a generational thing that probably won't be fixed by us in the longer term. Like it needs push from the government and the school. And I think I mentioned to you on the phone, like I did do a talk with some year 12s earlier this year about credit files and some chaps. And look, that was a drop in the ocean of the issue. And that was a mission, just trying to get into that school. And so, yeah, I think if it's going to change, if Australia as a population has changed, it's going to take like a lot of heavy lifting from a lot of people.
I'm at the forefront of that. Look, I guess the benefits of comprehensive credit reporting is enhanced lending decisions. The credit providers gain a better understanding of an individual's credit behaviour, leading to more accurate lending decisions. There's greater transparency. Consumers can see the full impact of their financial habits on their credit profile. Improved access to credit. For those with positive credit history, a CCR can improve access to credit as positive payment patterns are recognised. I'll give you a personal experience. My wife didn't even realise there were 2 credit cards taken by somebody with 2 particular banks, and we got told, well, hang on a second, you got 2 outstanding credit cards you haven't paid. And we've gone, what are you talking about? And then ended up being that somebody stole our identity, used credit cards, were transacting on them. And that process was easy. It was a phone call, was identifying ourselves, explaining, well, I don't know what you're talking about. And they've gone, look, we'll remove it from your profile. We've got a fair idea as to what's going on. It's currently under investigation with a few other files. There's a lot more involved, but that was the outcome. And they just cleared it off the credit report. But I guess, what are you finding most challenging in today's environment? You touched on it before, was credit inquiries and defaults. And the other one is financial literacy.
Yeah, and the repayment history as well.
But does the repayment history come down to the famous cost of living has increased? I know that's a very, very touchy subject. And, you know, I feel for the families out there who are under a crunch. But we're just trying to give the education around what can you do to help improve, maybe not your future, but break that generational chain.
Yeah. I think it has to start, if you're trying to break that cycle within, say, a family, you need to get educated around your credit report. And it's not as difficult as it may sound. Like, you can learn about credit files, and you can do things to protect yourself from the things you mentioned in terms of fraud. You can put bans on credit files if you, say, lose your wallet on a night out or something like that, so you can protect yourself.
You can also pay a monthly subscription to have your credit file come to you monthly, be notified. Is that correct?
Yeah, you can. So it's about $15 a month or something through Equifax. Strongly recommend that to all of our clients, because it just offers you that great protection of, if something goes wrong or someone's looking at your credit file that shouldn't be, get your monthly report and just feel empowered from knowing what's going on your credit file.
That's in your control as well, isn't it?
It is, yeah. And a credit repair, you don't always need professionals like myself to do it. A lot of people can DIY that. But it starts with just knowing what's on your credit file. So if you're getting it once a month, have a quick look at it. You'll be able to tell quickly, just like you did. You know, you saw the report and you said, oh, this doesn't look right. It's not us. Fixed, quite quickly.
How often would you do CCR?
Well, what we recommend is definitely do the subscription to Equifax, and you'll get your monthly report. So I'm not sure what day they do it, but once a month they'll provide a copy of the report.
Just on that note, equifax.com.au, I believe you're allowed one free report every 12 months. Is that correct?
If you're not signed up.
If you're not signed up.
Yeah,
but if you're signed up, it's $15 a month.
Something, yeah, definitely. And the actual file, the website to go through Equifax to get that free one, it's just mycreditfile.com.au. So yeah, that's probably where it needs to start for people that are curious about their report or want to learn about it, is just try to get a copy of it and just look at it. And, it's all broken down on reports as to what's what and whatnot. So it can be quite self-explanatory. It's just when things are in certain places, such as an inquiry or some late payments that don't quite look right, that's when you can look into it to see what's going on and try and fix it up.
Daniel, thank you for that. In Australia, credit reports are available through major credit reporting bodies such as Equifax, as we touched on, Experian and Ilion. Individuals can usually access their reports for free once a year or when denied credit.
Yeah, and if you're a business owner or company owner, you've got Creditor Watch as well. So there you report on companies, and we're seeing quite a lot of issues being reported on Creditor Watch as well. Especially
in the environment that we're currently in.
Yeah, definitely. I mean, running businesses, there's always some sort of dispute or some bill that is particular trades, there's always something going wrong. So if a business owner is not looking at their company credit file as well as their personal, potentially missing some things that might be getting lodged.
Well, Daniel, thank you very much for your time.
Oh yeah, thanks for having me, mate. I appreciate it.
Andrew, yourself as usual, and thank you for joining us on another episode.